Adam Patnod, CFO. This is my second Fulfilled, and it's this event which is so great to meet not only our merchant, but also our partners. But I'm excited to moderate this panel, what investors are looking at in 2026. It's a bit different than some of the panels that we've had to date here, but this was the #1 requested session out of last year's Fulfilled in Fort Worth. So it's a little different because we're going to be talking about not necessarily our product itself, but the dollars and cents side of things. So we've got an amazing group of panelists up on stage with me here, including two board members as well as a mix of earlier and later stage investors. So without further ado, let's start by maybe, I'll start with you, Shawn. Kind of introduce yourself and then a little bit about your firm as well.
Hi, everybody. I just want to say, too, that this is really cool. I met the folks from Pit Viper and Simple Clean Eats and Buddy Rider and the brands that you all are building, I continue to find amazing. So just really cool to be here. I've been at Menlo Ventures for 24 years and a ShipBob investor since 2018. I lead our consumer practice. So think of mostly tech apps, Chime and Uber, Roku, Siri, companies like that. The firm's investors broader beyond consumers, so Anthropic is one of our big investments. But we're always just looking for better, faster, cheaper. What are people trying to do? How do you accomplish it for them better, faster, cheaper using new technology? And that's why we liked ShipBob a long time ago, and they were much smaller then. So great work by the team to get here.
Hi, I'm John Hong. Excited to be here. This is actually, I think, my 4th Fulfilled. So it's just great to see how it's grown. Really appreciate the support of all the merchants and our partners here. Like Shawn, I sit on the board. I am an investment partner at Fifth Wall Ventures. Fifth Wall is a vertically focused venture and growth fund within the broader built world. So think of prop tech. We do some energy transition investing at all stages from seed to pre-IPO. I'll also bring up, I was previously at SoftBank at the Vision Fund, and I actually led the Series D there, and that's how I first came into contact and kind of got to know the whole team here, and then also led another round from Fifth Wall. And so it's just amazing to see how the business has evolved over time.
Hi, everyone. My name is Shen, and I'm the Director of M&A and Commercial Strategy at Mammoth Brands, which is a platform today of 5 disruptive consumer packaged goods companies. So our brands are Harry's and Flamingo, which both do shaving products and body care, but for men and women respectively. Lumi and Mando are our 3rd and 4th brands. They do whole body DO products for women and men respectively. And then Coterie is the last brand in our portfolio, which makes premium baby diapers and is primarily sold on D2C today. So Mammoth's vision is to essentially become the next big scaled CPG platform. So M&A is a really big part of our vision. What we look for from an M&A perspective is partnering with brands that are primarily sold online today, that we have conviction that we can help continue to scale on D2C, Amazon, and now TikTok Shop, but then ultimately also take into mass retail like Target and Walmart and help them become omnichannel category leaders. And from a category perspective, what we're really looking at are personal care brands, health and wellness, and home care. But I would say we're pretty open across non-food and beverage CPG.
Hi, everyone. I'm Lusa. I'm one of the co-founding partners of a fund called RÉDO Capital. RÉDO focuses primarily in beauty and personal care. Reason being, our anchor investor is the Geiger family. They're the controlling shareholders behind L'Occitane, which also includes brands such as Sol de Janeiro, Arboreum, Elemis. And so we really focus on beauty and personal care because of what we can bring by way of being a partner. Several decades of experience having been on the operating side, navigating, scaling brands, but also on the investment side, having had backed several companies over the last several years, actually well over a decade in this space. So, for us, we're really excited primarily to be alongside amazing founder-led brands that are kind of navigating what it means to scale. We do tend to focus more on masstige, prestige, but also spend quite a bit of time in mass as well. Some of our brands include Touchland, which was a ShipBob customer as well, Ellis Brooklyn. There's also several brands called Vacation Sun Care, as well as Dew Skin. And so these are all kind of elements of beauty. We also will look at B2B on the manufacturing side and value-added service providers side. So we really think about beauty and personal care end to end.
Great. Well, thank you, Lusa. Let's just pick up there. When you're evaluating a brand, how are you weighing the founder versus the product versus the market when you're looking at potential investment opportunities?
I think it's pretty hard for us to say like one is more outsized than the other because it really is the combination of all three. Given the stage at which we're looking at investments that are growth stage, the businesses tend to already have had proof of concept. So there's really great product market fit, a really strong community, also an incredible founder. For us, when we first think about the founder, there's something intangible where it comes to this grit and this resiliency where I think it's always inevitable that things don't go as planned. And that's like a given, right? And so we may be fully aligned on what the 5-year plan should be, but things will always come out of left field. And you need a founder who not only has clarity of vision of what the brand should stand for, but also this ability to really face those challenges alongside, other partners that are involved with them in the business. And even more so, they have to be dogmatic about what they want to stand for as a brand as they navigate what that means to grow at scale, but also always thinking about their team and their culture and what they want to build from that perspective. So that is an incredible, important piece for us. Without a really strong founder with those elements, there is no other kind of pillar that we would be willing to lean forward on. However, without the other two pillars when it comes to product as well as size of market, that would make for a really hard investment to not have all three. So for us, when it comes to product, we're really interested in the durability of that brand in regards to the entire pipeline of the products that they could bring to satisfy the needs of their customer and what they're looking for from that brand. It's not just a hero product. So we're already thinking about the next 3 to 5 years of product launches beyond this first initial hero product or category. And then, of course, when it comes to the market size, there could be a really great product and a really amazing fit with decent scale, but without the ability for the market to be much larger. As an investor, it is challenging to be able to underwrite and come in to support the business to be able to scale much larger beyond that. So we do need all three elements, at least from the stage of the investments that we're looking at.
Perfect. And Julia, in your intro, you kind of talked about how Mammoth is maybe a bit different than kind of the rest of the panelists up here. Maybe double click on that and talk about, comparing and contrasting to what Lusa just talked about, like how do you guys think about, some of the acquisition opportunities and equally as importantly, how are you thinking about sourcing these types of opportunities?
Yeah, so on the sourcing front, I would say our main sources are investment banks, other consumer investors like Lusa, who tend to invest at an earlier stage. So a lot of the brands they meet could be a good fit for us down the line or right now. And then we'll also just reach out to brands directly that we think are doing interesting things. Our focus tends to be on acquiring and partnering with brands when they're doing 30 million plus in revenue, but we really like building relationships with brands over time. So we'll often meet with them at a much earlier stage and go through that journey with them. And then I would say what we really look for there's 3 primary things that I think are all equally important to us. The first is that a brand has a disruptive consumer proposition. Harry's original founding mission was create things people like more, and that's kind of the bar that we want to hold all the brands in our portfolio to today. So we really want to make sure that every brand that we partner with is truly meeting an unmet consumer need and solving a problem that they have, because we're convinced that that's what will create longevity in this category that's becoming more and more crowded every day. I think the second thing that we really look for are brands that we think Mammoth could be a great partner to help with. There are a lot of really attractive brands out there, but not all of them are a great fit for our partnership, which is why we really tend to focus on these online-led brands that we think we can help take to mass retail and scale. And then I would say the third thing that we really look at, which is similar, is we really want to partner with brands that have strong founders or teams in place that are interested in running the business, even post-acquisition, because our operating model is one in which every brand tends to continue to operate largely autonomously, and we want to keep it that way so that they can keep doing what they've done to make the business really special. So for that to happen, we just want this team that's already in place and excited to continue running the business.
Great. Shawn, I'm going to jump over to you. You're based in San Francisco, which, one of the major themes of Fulfilled, but also I think every part of life right now is AI. Menlo was early in Anthropic and obviously lots of other earlier staged AI investments. Maybe for the benefit of the group here, kind of talk about, the evolution of that and kind of just like the status of AI, if you will, and how you're looking at it from an investor lens and how it's implementing not only investments you're making, but also maybe existing investments you have in kind of the CPG world.
Okay. That's a lot.
Yeah, sorry, I tried. You can break it up into pieces if you want.
So maybe just to go back a little bit. So we invested in Siri in 2008. Siri, before it was called Siri, was called HAL, as in the Space Odyssey and, computer that kills everyone. So the vision of being able to interact with a computer with your natural language has been like one of these super old things, but it just never worked. And so, we had been investing in various AIs over the years, and then, we had that ChatGPT moment, like many of you probably did. I think it was November of 2022, and I remember coming in that Monday, and I'm like, it's finally been cracked, right? Like the LLM, the large language model, is just this new fundamental ingredient technology, the way a smartphone is, or broadband data, or databases, or any of these like platforms that people can build on top of. And then the question becomes, okay, how do you invest in this? And that's been the last 3 years for Menlo. We coined the moniker All In on AI a long time ago, and have continued to invest. So I'd say that many of you have experienced the chat bots. I think the coolest part about how it's interacting with e-commerce is like, if you build something that's like absolutely the best in the world for a certain type of customer, you can kind of find your way to them now, I think, in a very different way. You can do market research, you can collect all the feedback, you can like really fine tune and dial in who you are, and all of this stuff like reconciliation, all of these annoying things that probably you don't wake up in the morning and be like, ooh, I can't wait to reconcile the inventory between these two ShipBob FCs. It's like, great, let AI do that and focus on talking to customers and refining the brand and having Google or Meta ads that are automatically pushed out with really one-to-one language. So I'm really excited to see what it's going to do to just all of these great ideas over time. Like the infrastructure is being built now. It's still very early in applying it both to internal operations and launching new products.
Yeah, it is pretty amazing because I agree, it is early, but the 0 to 100 that's occurred in the last 2 years and even the last 6 to 9 months, that growth curve is going to continue.
Yeah, Anthropic has been the only company I've seen over my 24-year venture career that's 10x'd for 4 years in a row now.
Good for you.
Better to be lucky than good.
So John, you've obviously been on the investing side here for a while, in cycles and industries become more favorable, less favorable. As you think about your investment style and kind of horizon or appetite, what's changed, and like what is kind of maybe a takeaway for the room here on that type of how things have been refined?
Yeah, I think I feel like cycles have gotten shorter and more violent, right, over time, from the great financial crisis to COVID to inflation to geopolitical tensions. I think actually the more that changes, actually the key things that are important around investing are actually the same, right? That whatever you're investing is solving a big problem, is doing it in a differentiated way, that you're backing a team that you believe in and that can draw on the right amount of talent that are solving real customer problems in a capital efficient way. I think continue to be really important. Now, I think the tools and the technology that we go about to do it are obviously changing, and we spent a lot of, I think, this fulfilled talking about AI and how that's really accelerating, right, and changing the dynamics between how software, is used to probably make data visible, and then there would be a human that would act upon it, to AI now generating that automation that, if you're a company that owns your data, that you'll be able to actually move faster, move cheaper, and actually win in the end, right? Whether you are solving a logistics problem from the previous panel, which was really cool to see how people are applying these tools in ways that may not be super obvious, but actually turning many individual people into what feel like at least programmers, right, that are able to push stuff to GitHub to solve very specific problems that used to be fairly mindless work, or you would have to hire a bunch of junior analysts that would have to go pull this data manually. For the way that filters up to us, all that just means that the marketplace between companies will continue to get competitive, but the fundamentals of solving important problems with the best teams continues to be the same. And what we don't know around all these things is also, as the cycles change, you have to be adaptable, right? And that's why I still think the teams end up being important, because these things shift over time, and you never know what will happen, right? We may have another something ChatGPT moment in 2-3 years, right, that we'll all have to adapt to again. And if you get stuck in that, you may not survive that next wave.
Mm-hmm. Thanks. And Lusa, on this concept of evolving, right? E-com and brands have been evolving. Like pre-COVID to even the last couple of years, social's impact. What's changed most in like the brands that your team is evaluating to invest, kind of over the last couple of years?
Yeah, I'd say similar to what John was saying. All these difficulties that have happened over the last 10 years, it just feels like it's every year something new. For better or for worse, I feel like that's taught a lot of our founders resiliency, and then also that need to do more with less. So being really, really thoughtful when it comes to capital efficiency of like every project and every dollar spent, how they think about that impacting their bottom line, and just having a very thoughtful lens towards like margin and contribution, and not just growth at the sake of growth, and being very strategic on where they spend their time. So I would say over the last kind of more recent few years, that scaling process alongside margin has kind of come in tandem, as opposed to, I'd say, a little bit earlier on, you would often see sometimes of that diverge in regards to being able to sacrifice a lot of profitability just to have that growth trajectory. And so for us, that's come at price points at which you're targeting and which channels you're going into, which ones you're prioritizing, how you think about marketing spend, how you design your products for the long run, and how you even think about your pricing strategy. All of that has come to bear, and I think all of that has also shifted the strategic acquirers landscape and how they think about the brands that they're acquiring. It's not just scale. It's oftentimes like what you were saying too with Mammoth, a lot of these brands post-acquisition still are standalone. And so the unit economics have to work well, even if their brands are continue to operate on their own after acquisition. So all of that has kind of been part of the evolution of a lot of challenges, but also for the better.
Mm-hmm. In Julia, with the investments or acquisitions you guys make, maybe for the benefit of the crowd here, how involved are you? We talk about this complexity, right? And like the world is changing, it's getting more complex. Where does your firm sit in supporting founders or kind of executive teams around those?
Yeah, I would say we largely try to leave them alone because they've obviously built a really successful business up to this point, and we don't want to overwhelm them and get super involved and lose the magic that they have been, successfully building. I would say the main ways that we integrate are through some back-end functions like finance, legal, and IT, just to provide them with more capabilities on that front and kind of allow them to level up without it distracting them. And then the way that we really think about adding value is through talent transfer. So potentially bringing someone who led Harry's retail business, for example, and is very good at that, into a new brand that we acquire so that they can apply those capabilities and everything they've learned as well as their relationships into a new brand without being that disruptive.
Great. Shawn, I want to jump back to you because I think you're unique in that a lot of Menlo is pretty early stage, right? And our brands here are probably a little bit further along versus like the product market fit. But where does the conviction come? And I'm kind of circling back to some of the other panelists around the founder, right? I mean, that seems to be the thread, right? In understanding the founder and the management team and that type of stuff. Is that, but it's an individual. Where does that conviction come from to invest initially, and then you guys have the history of like continuing to invest along the way?
More tech focused or e-commerce?
Yeah, kind of more like e-commerce or CPG.
Yeah.
But is it that different?
Yeah, the principles I think apply. So I always say in venture, the world is the way the world is. Like your job as an entrepreneur is to like meet the demand that already exists in the lives of these people. You're not like manufacturing the demand. And so it all starts with what I think of as an important unmet need. Like it's meaningful in their life, enough where they're gonna spend time or spend money, and it's unmet by the existing products and services on the market. So that's like checkbox number one. Checkbox number two, we call uniquely capable founder. So, okay, so you have this important unmet need. What is it about this founding team that is perfectly matched? Because a lot of people are gonna see that same problem out in the world. What is it about this founding team that's perfectly matched with solving that at scale? And just, to talk about ShipBob for a second, when we met Zhou and Dave back then, it was very clear to me after I spent time pick-packing and shipping a couple boxes in the warehouse, if you did not have vertical integration across the technology stack, that you weren't gonna be able to solve the problem in the right way. We had a robotics investment in warehousing as well. I was there like the month before, and the scanner was like this big, laser thing. And then you go to ShipBob, and it was like this little, finger-borne Bluetooth scanner. And I was like, well, how did you guys get that? Oh, well, we just like adapted the technology. So in this case, it was like you think of these guys and the team, the early hires that they were making, the Casey's and the Eric and all these fellows, and like they just really, really deeply felt that passion for the mission of the customer, right? Like they had gotten to this problem by selling picture frames printed from the internet, right? So it was like they really felt it, and they're like, there's just a better way in the world. They felt the pain directly. So that's the second one, the uniquely capable team. And then the last two, compelling unit economics and scalable, repeatable growth engine. Compelling unit economics, I'm sure you all know, gross margins. You can't make it up on volume if you have zero or negative gross margins. So like you have to find enough value out in the market where you can price and make money to pay and grow. And then the scalable, repeatable growth model comes from finding these channels, and those have been evolving a lot. Obviously, like Google ads way back in the day, Meta, more influencer stuff we're seeing now. Like how do you get kind of scalable deployment of your ad spend out on these new networks? And then the most emerging is this like answer engine optimization. So how do you build content on your website such that the LLMs can ingest it in a really meaningful way, and therefore if somebody says like, hey, what's the best new protein supplement, they'll find Pure Genius, which is like the 5-hour energy, another person I met at lunch, the 5-hour energy of protein, right? And like you just want people to be able to find their way, and if you haven't put that content out there, through blog posts and for the crawlers to find, then it's not going to be like in the mental model of the LLMs to regurgitate.
Mm-hmm. Helpful. I know we're coming out of time. We have one last question, but Shawn, I think you weighed in a little bit there about ShipBob. A lot of the merchants, actually every one of the merchants in this room has invested in ShipBob, by entrusting, the stewardship of their brand and like a very complex aspect of it. So John, you've invested twice, right? At SoftBank and then again at Fifth Wall. Maybe picking up a little bit on what Shawn is like, what is it about, the opportunity, the team, et cetera, And sorry, we did need to make this a bit of a commercial just because. It's our conference.
No, the first is just you just follow Shawn. Had I done the Series D at Anthropic, I would also be all smiles. But no, I think building upon what Shawn said, right, it was a lot of similar things, right? So one, what ShipBob was solving is really important, right? The secular growth of e-commerce in an area of basically trying to arm the rebels, right? If not for you all not to be reliant upon Amazon and to go out and solve an extremely hard problem. And having met Zhou and DeVay and the team and their ability to solve this, I think also for us to invest in category leaders, I think at that time it was right at a key inflection because there are a number of them. And the way I had thought about the investment when I was originally at SoftBank was, look, if you were to put a 4-quadrant box, right, of kind of customer focus on one axis, which is SMB to enterprise, and then kind of asset heavy to asset light on the y-axis. And how do you go about that? And actually what Shawn touched on was really important is I had sort of met with all their peers, right? So from Chipmunk, which is asset heavy at the SMB, and sort of enterprise, and then all the way to Flex, which was asset light to enterprise. And that development of when we had invested, I think there were 4 SICs, right? And having that vertical integration of being able to develop the technology when it involves moving physical atoms as opposed to bits in cyberspace becomes really difficult. And that differentiation was super important in terms of what I saw them building. And I think that resulted in the customer outcomes and at that time enough cohort data of all the customer success that hopefully they were driving for all of you at that time to say, hey, okay, this makes sense. You guys are going to come back, continue to grow with your merchants. The ShipBob will grow with the merchants, and you guys actually have aligned success, right? That there's no conflict, say, that you would have by putting your stuff on Amazon, where maybe they see, okay, you have a really successful product. Maybe we'll make a generic version of it, right? So I think that was really important as I thought about, at that point in time, why, this is obviously an important problem, but why ShipBob over some of the other peers? I think then another fellow board member at Bain led the Series E. I transitioned firms to Fifth Wall, and at that point, looking at the conviction actually just continued to build because at that point, you saw it, right? And by the time I invested, the whole SFN play had played out. You could see the move towards mid-market and getting more and more sophisticated. And a lot of the product roadmap that Zhou and DeVay had talked about when I had first invested in 2021 really started to play out. And I think you've only seen that continue to evolve until this day, right? And so as I look back, it's been really exciting, right? When we first invested, I was just reviewing the numbers ahead of this. The business will have 10x gross revenue, right? Now, they have, there's billions of dollars of gross merchandise value that now comes across it. We are multinational, right? And now, in the beginning, I don't know if you remember this, Shawn, right? Like, there was this big debate as to a lot of investors I would talk to, like, oh, ShipBob's very asset heavy now. And we used to break out, I think, SFN revenue versus SIC revenue. Like, we haven't thought about that in a long time. And the ability to actually replicate this technology and then get third-party partners that we work with to actually drive this technology is an amazing feat, right? Because that provides that scalability and that repeatability that is really hard to do. And what you've seen with many of ShipBob's peers is actually that have started asset light, actually become asset heavy and have actually had to develop their own warehouses because it is very hard to credibly develop technology to move physical goods because it is so complicated without actually controlling it. So, sorry, it just a lot of excitement. Yeah,
we have supportive investors. It's great.
Yeah. So, thank you.
Yeah. So, okay, I think we're up on time. Thank you all. Hopefully that was a helpful session. Everyone will be around after, so feel free to catch up and enjoy the rest of Fulfilled and enjoy this evening. I think we've got a bit of a break right now before the last couple sessions.